And welcome to the Hurley Investments Market View commentary for the 13th of July. Hard to believe we're already through half the year, but this is going to be a quicker video today. Just going to go over a couple things that a couple of you have brought up. And I think I found it interesting because I think I addressed it in my recap that I emailed out last week. But let me go through it with you guys here today. Thoughts for the end of the year. And I basically had mentioned this in my email recap. And there are just a couple things that I keep pushing my direction. I believe through channel checks that technology will still move higher due to the amazing top and bottom line returns. It's a simple equation. They are still making so much money, even though they're putting so much money into AI. I believe I went through this last week where I listed the square footage that they're making in their IA factories and the money that they're making doing it. The numbers are outstanding. It doesn't mean that, how would I say this? It doesn't mean that the market's going to listen. It doesn't mean that the market's going to say, hey, AI deserves to go significantly higher. But what it does mean is fundamentally, these guys have the opportunity to move and continue to move big. If I was to pull up a quick chart, if I could find it, I'd pull up a chart here. And just to show you Meta last week, how did you beat the market by 2% last week? Because Meta went from 581 to 677. It moved almost 100 points in 3 days. Micron moves from 891 to 1,035 in 3 days. Google L went from 330 to 373, roughly 12.5% in 1, 2, 3, 4, 5, 6, 7 business days. Apple 273 to 317 today. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 business days or the month of July. This is what I see and what I'm calculating. Second, we typically have a Christmas rally. Some years much bigger than others. If I was to ask the group, does it feel like we're in the summer doldrums? Does it feel like we're just slogging along right now? Maud typed in yes. Mary typed in yes. Leave it to the women to go, yes, like no tomorrow. Yeah, we're just slogging along right now. I feel exactly the same way. But that usually with the pent-up demand, with the war, with what Walter said today, I mean, this year, plain and simple, we have fought inflation. And it's funny because Walter said, hey, any inflation this year is 100% not related to tariffs. In fact, President Walsh, I think it was 9 out of the 11 voting chairs, basically said, yeah, we've had zero inflation from tariffs. I wish they'd announced that a lot bigger than just being in their beige book that came out, but no inflation from tariffs. Let me take that back. We have fought inflation, not necessarily from tariffs. Kevin, where's inflation coming from? So I'll put this in here really quickly. We'll go through that next. This year we fought inflation, Iran. I'm going to say Russia, meaning the Ukraine-Russia war. We fought AI overload, decreasing margins due to huge investments in AI. I'll be honest with you. I'm kind of glad this year it feels like Americans aren't fighting Americans, that we don't have all of the immigration ICE problems. If I can go so far as to say, I definitely feel like we're dealing with corrupt politicians. It's sad that they make $173,000 a year, but are all of a sudden worth, $30 million. $200 million. It just doesn't make sense. Okay, inflation. Had this talk with my son. Housing. And I'm going to give it a break that housing is a supply and demand problem left over from COVID. There is still too little supply, and there's too little supply on the lower end housing than the upper end housing. But COVID really did a number on supply and demand. There's just not the surplus of homes available for people to purchase. My son is beside himself. He just recently got married, into marriage a month, already thinking about, boy, when I buy a house. And he took a look around and he's like, holy crap, I can't afford anything. Which is going to be hard because I think the upcoming generation will have to buy farther from work and really buy a piece of crap starter home. Until they gain some equity. Or till the supply comes back online. Problem is at least no, they can't live with the parents anymore. The problem is that I'm seeing is the supply that's coming back online are no longer those starter homes. They're in that $600,000 to $1 million price range, which is just unreasonable for kids coming out of college that aren't making a six-figure salary. It's just unreasonable to see that opportunity for these young kids. Yes, I allow my kids to live at home while they're going to school full-time. Moment they graduate, they've got 90 days to get out of the house. If they decide to not go to school full-time, they've got 90 days to get out of the house. That's the way I've chose to run my family. So, short answer, if you were to ask me, and again, I made the comment as such, I can calculate, can't type, I can calculate another 5 to 8% in the S&P 500 by the end of the year. I can't calculate a recession for 2026 at all. In fact, I can't even calculate it Can't calculate a recession in 2027 either. The numbers just don't add up. What numbers are you looking at? Personal spending, personal income, initial jobs claims, JOLTS numbers. Yes, we have inflation, but it's not weakening to the point that people are worried about it and saving versus spending. There's no numbers I'm using that shows me a recession. Well, obviously, because we've had positive GDP numbers, right? We can't calculate 2 consecutive quarters. I was a little worried about going into next year and calculating 2 consecutive quarters. Well, what happens if the Republicans lose the House or the Senate? If they try to redo all the stuff that's been done, and again, Democrats are pretty well known for raising taxes, that might hurt. But I still don't calculate a recession in 26 or 27. In 2028, I could see the pullback of all mothers of pullbacks in our stock market. The neat thing is it's kind of impossible to calculate a black swan activity. Let's just put it that way. Okay. We have our earnings list here. Start to go through them. Really, for this week, Bank of America, Citigroup, JP Morgan, Netflix on Thursday. Those are some of what we trade. We have KeyCorp and Google next week. The big picture, when earnings may not be good enough, I don't know why the briefing has gone so negative. And I'm not sure what to say. Because I agree, but I don't agree. Second quarter earnings should be strong. But elevated valuations have raised the bar for what investors will consider a successful reporting season. I actually see valuations that have come down in the last 110 days when oil spiked higher. Information technology energy are expected to drive most earnings growth, making results from key semiconductor companies especially influential. Well, duh. companies should have done really, really good making money when oil spiked to $110 a barrel. Beating earnings estimates alone may not be enough. Companies must validate lofty growth expectations to sustain the bull market. That is directly related to the investments in AI, which is rather funny because Google did an excellent job. Meta did an excellent job. Those two companies were punished. Microsoft with OpenAI, Amazon with AWS, they sucked it up. Their earnings weren't very good. Those two companies seem to be rewarded. Apple's coming in with some of it. It's been rewarded. But again, we're getting back to an irrational market that this comment, beating earnings estimates alone may not be enough. Companies must validate lofty growth expectations to sustain the bull market. If you run the money that they're making per square foot of these servers in their data factories, we ran it last week. 1,000 computers, or was it 5,000? I can't remember if it's 1,000 or 1,500. However many we figured out, $60 billion a year. And companies are paying for that information. The sad part, Meta's using it for themselves. Much better return on their investment for selling crap to people. I don't buy stuff on Facebook. I've learned my lesson. It's never what it really is. But phenomenal growth for sales on Facebook. Phenomenal growth on Google using AI for their target market. Phenomenal growth for Apple. I'm a little shocked that I'm really shocked that these companies are not where they need to be. And the ones that were rewarded are the ones that are sucking it up. Doesn't make a whole lot of sense. Very interesting article, except for the fact that meeting high growth expectations will be impressive, but will it be enough? Not unless they describe and explain where they're going to be making their money to the upside. I will do the best I can to help these companies by reviewing what I did last week in our commentary. Will the markets end this week? I'm going with higher. The neat thing is Dow Jones Industrial Average is bullish, but it came down last week. Good thing we don't trade these 31 companies. S&P 500, it just kind of rolled over again the last 2 weeks. It's testing that 50-day. I think earnings will make the difference. I like looking at the RSI. That RSI, that gives me the opportunity to feel comfortable knowing that we've got some space to grow here. The fact that we have the MACD laying on each other says an opportunity, looking for a bounce. Last bounce from earnings, pretty darn good. Doesn't mean we're going to get it in the summer doldrums. Not at all. But technically speaking, I really like the way that this looks on an index level for running into July, August. The NASDAQ. Flat. Technically, except for the 5 and the 20 day that are not crossed over, we are technically bullish, but only on the 5 and 20 day exponential moving average. RSI is negative. I actually can't see the difference in the, Looks like the crossovers happened on the MACD too. It's bad news. It's bad news, but looking at this chart with room to grow from the same chart pattern as the S&P 500 from the last earnings session, I like where we have the opportunity to go. Not saying that we're going to, but it really looks good to me. I'm still going with the 1.5% upside in July. Earnings, really pretty neat that we have Tuesday, Goldman Sachs, Wells Fargo Company, Bank of America, Citigroup, JP Morgan. Wednesday, First Horizon National, Morgan Stanley, United Airlines, and Johnson & Johnson. We'll see how the wars affected United Airlines and their lack of getting jet fuel. I would expect the airlines to not post a great earnings. Thursday, Abbott, GE, US Bank Corp, United National Health, Alcoa, Netflix. Netflix after the market closes. I would really hope to see Netflix head higher. Their earnings did not substantiate a 38% drop. I'm kind of guesstimating on that number. 110 down to 70. It just didn't substantiate that. If we break 70 because of earnings this Thursday, we're doubling up on puts. We're in deep trouble. That stock looks like it's going to get beat into the ground and will be a 60% loser this year. Auto live on Friday. Tomorrow, CPI and core CPI. Those will be important numbers for Warsh. If we look at the beige book and what was said, what they said, what they're coming out saying after their FOMC meeting last week, there's an above average chance nothing's going to happen this year. No rate hikes, no rate cuts. Again, I thought his name was Walters this morning. A pretty good conversation on CNBC on how they're worried. They're worried about the inflation, and they're worried about where how do I say it? Where the break's going to come from inflation now that we have restarted the war and we're attacking each other again between Iran and the U.S. As you saw in my recap, I think capitalistic markets do a great job of rerouting and finding solutions. More pipelines, more oil going the other way, more companies opening up their spigots, OPEC fracturing, and now anyone that used to be an OPEC is selling their oil when they have the opportunity to sell their oil. New routes are available. There's a lot of new opportunity through having so much reliance on the Strait of Hormuz. And it's a great opportunity for oil companies to do significantly better. When I say that, I'm not saying that for U.S. oil companies. Valero seems to be doing the best. I don't even think it's really helpful for Schlumberger or the refiners. Energy transfer, the transportation. I just don't see a huge amount of growth and opportunity. But I do think as a whole, the oil producers as countries have some great opportunity to sell significant amounts of their oil. PPI on Wednesday, and we're digging into the beige book. A lot of what was said over the FOMC meeting, their minutes have been dug into. The beige book will also be interesting. We have retail sales on Thursday. Probably will be I don't know, not really important. Let's just put it that way. Housing permits, building permits, industrial production, capitalization, Michigan sentiment on Friday. Inflation will be the key point. Tuesday, Wednesday, that's what could move our market. Pretty interesting because CPI is supposed to be down negative 0.1%, and core CPI is supposed to be 0.2. That would mean if those numbers, for core grew by 0.2%, that put our inflation at 2.4% for the year, meaning if it kept going at that rate. PPI, personal price index, supposed to be up 0.1. The core is supposed to be up 0.4. Extremely elevated PPIs. If any of those numbers come in 0.1% better, we should be off to the races for the end of this week. All right. Placing at the money puts or slightly out of money for earnings. We already covered calls to most positions through summer doldrums. We're actually starting to take a couple of those off and also raise them higher. Very interesting article on Meta to put AI chip into production in September as it looks to double its computing capacity. Interesting article basically telling you this is how Meta will get to $900 by the end of the year. Rivian tailspin hasn't shaken one trader's resolve. Electric cars have tanked. Yes, there's one trader that's making a bet. I would bet on Tesla. I would not bet on Rivian. The stock price has taken an ungodly hit. $9 billion in negative cash flow, going all the way out until 2029, says that the company can't last. Traders fall back in love with Meta. Here's where the bulls are seeing going. Another interesting article on Meta. Obviously, we're in some of those. So I have Meta here for you guys to read. Traders on the Kalshi think the NASDAQ 100 will end 2026 above 30,000. Predicting a cooler second half of the year. It's interesting because if we go up and take a look, 30,000 is another 4,000 on a 26,000. If I do my math, I mean, that's what? 10, 13%. I'll take it. If they think that's a cooling, I'll take it. The numbers add up. In fact, it almost looks like the NASDAQ could peg at the end of the year right at 30,000. It probably will not go much higher. Work their numbers for them. The case for the S&P 500, 8,000. And stick with Micron Tech, according to No Name Research. Other people working the numbers saying, hey, pretty interesting on where it can get to. Josh Brown likes the sleeping giant AI play, the Magnificent Seven member. Apple's back in favor with the market. Very interesting article from Josh Brown. I did a little bit of research on those Trump accounts for the children, where if you set one up between now and December 31st for new children that are being born between January 1st of 2025 to December 31st of 2028, you can set up a Trump account, which is a federally backed tax advantage investment account. It's a form of an IRA or tax deferred account where it's going to receive an additional $1,000 deposit from the U.S. government. So pretty interesting. I just did a AI search for it for you guys to read about it. And another Micron article, Micron stock sell-off won't last. Here's the simplest reason why, and it's the growth. It's the growth in the numbers that it has. I put this in here so you can calculate all of your own numbers. With that said, questions. What questions do you guys have that I can try to answer for you? Abraham, you should be able to do a Trump account with any broker online. And if you have a Valero spreads expiring before earnings, take those profits. Hopefully it's a bull call of Valero put spreads. Hopefully it's a bull put where you took in a nice credit. Take those profits on Valero. Trump's own account is held with Schwab. That I do not know. Trump accounts are just a tax-deferred accounts for children through Trump's 4-year presidential cycle. And Dell, is it Dell? One of the major companies is matching the, if someone creates a Trump account for a child that's born between January 1st, 2025 till December 31st of 2028, they'll match up to $1,000 investment into that kid's account. And it would surprise me if Trump's own account is held with Schwab. I'm pretty sure Trump goes through someone that's self-clearing in New York. I would not expect Trump's accounts to be held with Schwab. It'd probably be with a boutique hedge fund that does that. Any other questions, guys? If not, this will be one of my quicker ones. Welcome to the doldrums of summer. But if there are no other questions, guys, I appreciate you being here. I look forward to seeing you in 2 weeks. Next week, we're going to have Brian taking care of our class. But guys, I appreciate you being here. Have a wonderful evening. I will see you here in 2 weeks, and we're going to get into the nitty-gritty of earnings. Earnings will move accounts higher going into the next 2 to 4 weeks. Good night, guys. Have a good evening. I look forward to talking to you here in 2 weeks. Brian will have next week. Have a good evening. Bye-bye.